What's up, Wealth Nation? Today's content, we are talking about how to manage your money like the rich. So it's all about making sure that you have a purpose for every single dollar. My name is Carmen.
And I'm Darius. And it's really important that you do have a purpose or have a assignment for every single dollar, because you don't want your money telling you what it did.
No, you do not, because you want to tell your money where to go and how to get there.
Exactly.
So in today's video, it's just really about understanding how to manage your money, because the title of the video is Manage Your Money Like the Rich. And the fact of the matter is they have a plan for every single dollar.
Now, here's the thing. When we talk about doing infinite banking or borrowing from your whole life insurance policy, you have to have some habits going into it before you can really take advantage of this concept.
Absolutely. That's so true. And I'm putting a link in the chat right now. That's what I was just doing so that everyone has access to it. But if you're looking for resources or help when it comes to just managing your finances, then definitely check out the Money Blueprint course, because this is where Darius and I just break down your personal finances. Because in order to be a successful banker, you need to be able to have your numbers together.
Right.
So let's dive into basically what we're talking about when it comes to your finances in general. So every time you get paid, just think about it. Every single time that a check rolls in, are you allocating your funds a certain way? Do you know that you should only be spending so much in certain categories? Do we know that? Yeah. We didn't know that.
No, because what happened when we got paid is we got paid, we pay our bills, and whatever's left over, I mean, we can go and party.
It's so true. Oh my God, gotta love the good old days.
Yeah, but honestly, thanks to when we first got married, Dave Ramsey, we got our finances in order to a certain extent.
We did. Yeah. And really through that organization and the system of understanding how to budget, it made us realize like, wow, we're kind of irresponsible with our funds.
Yeah.
Because you're right. We're like, is the water paid check? Is the gas paid check? Is the house paid check? And the cars are paid? Whatever is left is free game. And that just really isn't the case, especially if you have goals that you want to accomplish.
Right. And I 100% agree with that. But now what we're doing is right now, every single week, Carmen and I, we meet and we have a discussion about our finances. And it's really important that you have a certain time every single week where you sit down and you look at your numbers.
Yes.
It's really important, because the difference between someone that is rich versus someone who isn't is the time and effort that they take in managing their funds. Somebody that isn't successful, they don't manage their funds at all.
It's a very good point. So let's dive into some of the concepts that we're talking about. So when you get paid, it's really important for you to understand that you need, like we said, we need to tell your money what to do. So we have this rule of thumb that's kind of easy to think about. So it's called the 50-30-20 rule. And basically what we're talking about are the ratios of or allocations in which you allocate a certain amount of your income towards these areas.
Yeah.
So 50% is basically what we would say that you're contributing the majority of your funds to your basic living needs.
It's your fixed expenses.
Your fixed expenses. So what are your fixed expenses? We're talking about your house. Think of Maslow's hierarchy of needs.
Things you can't go without.
The first level of Maslow's hierarchy of needs: food, shelter, and clothing, basically. So for us, it's about taking 50% of our income, no more, and allocating that towards our fixed expenses.
Yep. Now we're talking about this basically because this is what Carmen and I are practicing.
Yeah.
Now the numbers may be different for you. You just have to make sure you start wherever you is most comfortable for you. So Carmen and I, 50% of our fixed expenses includes our housing and living, it includes our utilities, it includes our transportation, and soon is going to include our childcare, because that's something that is a necessity, a fixed expense that we have to maintain in order to have a maintain our living.
Yeah, it's very true. So just think about it, and do a little bit of the math. Right now, how much are you spending on those fixed expenses? Because the reality is you could be spending way more than 50% of your income through your mortgage. You know, we know many people that spend, you know, $4,000 or $5,000 easily on a mortgage when really they only bring in maybe $7,000. So there's a little bit of a discrepancy there, and you could possibly be living above your means. So that's why for us, at least, it's important to be diligent in understanding how much money we need to be allocating where, so that we can make sure that we're under these thresholds.
Yes. Now, the next part is the 30% that we are allocating in our budget. That goes to our flexible expenses. That includes like our, I actually have a paper here. It includes our personal, like our grooming, our clothing, entertainment, travel, education, credit cards is a flexible expense, tithing. All these expenses are flexible because they aren't a necessity. They're really important, but they're not a necessity for us to maintain our lives.
To live, especially, and that's really important to understand, because you know, a lot of things that Nelson Nash talks about in his book Becoming Your Own Banker, you know, sometimes a luxury once enjoyed becomes a necessity.
Yes,
we know very much for us, we appreciate grooming. It's been a little difficult now with grooming, but we appreciate grooming. We appreciate eating out. We appreciate doing some of the finer things in life, and what we recognize is we're spending, again, way too much money in these categories, because a luxury once enjoyed becomes a necessity. You do it once and all of a sudden you got to do it over and over again. So just think about it, and then go ahead and put it in the chat. I'm just curious what some people say. What are some luxuries that have now become necessities in your household that are not necessarily pertinent to your day-to-day functions?
Yeah, I know one thing for us was eating out. We've done a few videos where we explained that we spent a lot of money in restaurants.
Oh yeah.
Now, fortunately, that hasn't been the case as of lately, because of the things that we've been experiencing. But now we're cooking. So right now we have additional funds that we are better allocating as a result.
Exactly. So just to recap, essentially, because where we are, so we're talking about, we've covered about 80% of our income. So we have 50% that is going towards fixed expenses. So again, our housing, everything that encompasses housing encompasses food and transportation, basically. So again, think about your cars, think about how much you're spending on food, groceries, things like that. We actually had to look up things when it comes to food. We had to look up something called the Dirty Dozen and the Clean 15, understanding how to buy organic and not organic, because a lot of people complain about how expensive organic is. So if you're trying to figure out how to be a little bit more budget savvy when it comes to buying organic food, look up the Clean 15 and the Dirty Dozen. So this is basically telling you that there's a certain amount of fruit and vegetables you can buy that are clean. You don't need to get organic, but there are some that are dirty that you need to get organic. So we started doing that with our budget because we like to eat right. So, you know, there's all sorts of tips and tricks that you can do. But again, you know, something that we talk about in more of our videos is just, if you can't afford to buy something twice, you can't afford it.
Right.
So this goes for a lot of those fixed expenses. Your house, you know, your car, think about the payments that you're paying through your mortgage or either your rent or your car notes. Could you afford that payment doubled? You know, if your car note is $400, could you afford $800 a month for your mortgage? If you're paying $1,500, could you afford $3,000 a month?
And what this does is it keeps you from getting into trouble, because the most important thing that we should be doing is this next part, which is the 20% that we allocate our funds to, which is paying yourself first or saving. Saving is really important, because when you save your money ends up saving you in the future. It keeps you from these flexible expenses getting out of hand, these IOUs, these credit cards. It keeps you from having to dip into those funds, which end up charging you more than you end up borrowing in the first place. So then when you have these credit cards that tend to creep, what happens is your flexible expenses tend to increase, which throws off the whole budget.
Yeah. Oh yeah.
So it's really important that you save, and allocate funds accordingly.
Couldn't have said it better myself. So again, just to reiterate, ladies and gentlemen, if you are looking for help when it just comes to your personal finances, we're not even talking about infinite banking just yet. We want to make sure that your personal finances are correct and you're in tune with them before you even think about becoming your own banker.
Mhm.
So if that's the case, then in the chat, we have a link to our blueprint course. This is our Personal Finance 101 course where it walks you through exactly what we're talking with the 50-30-20 rule. We talk about mindset, we talk about debt, we talk about banking. It's just really making sure that you have the proper foundation that you need before you start trying to level up.
Yeah, because it's important that if we do these things now, like let's say our budget is $5,000 a month. If we can do this at $5,000, then we'll take those habits with us to $50,000 a month.
Mm-hmm.
Whatever habits that we have now is the habits that we will carry over. Because when you think about it, people that are entertainers, people that are professional athletes, a lot of times after they stop doing their profession, they sometimes lose their money. It's because of the habits that they've created.
And they don't even have to wait till they retire. And sometimes it's during the whole during their career, they could be mismanaging funds.
Right. So we should be very intentional about the habits that we create before we jump into anything. That includes even infinite banking.
Mm-hmm.
Make sure you have your habits in order prior to it, because having more money doesn't fix the problems. It only magnifies it. It only magnifies it.
It only complicates it. So if you're watching this video live with us right now, do us a favor and hit that like button. Show us a little bit of support over here for the live event that we're having. But exactly to Darius's point, when we're talking about managing your money, it's really just about making sure that you have a plan in place, because you find people who win the lottery, people who have all these windfalls, money that comes to them, and now they've spent it. They have nothing to show for themselves. And it's all because there was no plan in place.
Yeah. And the interesting thing about, I would say, money is the fact that when you have money and have a good habits with money, it starts to attract more money to you.
Yeah.
So people who don't necessarily have money, they keep getting the same results over and over again because they're doing the same thing, expecting a different result. So if we have this habit in place of us managing our funds the way we should, in the way we want to, then it starts to compound on itself.
It does, absolutely. And think about it. I mean, today, did you use a GPS to figure out where you needed to go? Did you use some sort of direction, some sort of guide to get you from point A to point B? I would assume yes, if you drove in your car today, this week, whatever it is. Anytime we get in the car, through the wonderful world of technology, we are able to put in an address and it takes us directly to where we need to go, right? Instead of going all over town trying to figure out where the nearest grocery store is. But why don't we put those same principles in place when it comes to our finances? We need direction, we need guidance, we need accountability. And time after time, we continue to get our paychecks, spend all the money, and then wonder where it goes. So if you're sick of that world of insanity, then it's time to do something about it. And nothing is ever going to change when it comes to your finances unless you are willing to make the change, unless you are willing to take action. So, you know, with so many people that have been subjected to what's going on in the market, with so many people who have lost their retirements again, when is enough enough? And when are you going to take control of the opportunity of controlling your finances so that you can stop leaving your money in someone else's hands?
Yeah, and the interesting thing when it comes to the concept of infinite banking is it's more about control than it is life insurance. The more control you have over your finances, the better the decisions that you can make for your financial well-being are.
Yes.
The more control you have. Because let's take us for example, like when every single week we get together and we talk about our finances. There's no surprise from week to week as to where our money goes. We know every single week what's going to happen, but still yet we have that habit of meeting. Every time we think about buying something, we talk it over with each other before we buy it, no matter what the amount is. So one of the important things that I want to share with you is the fact that if you have other people in your household that you manage your funds with, you should bring them in the conversation. This should be a team discussion, because if a team is running your household, then a team is what's needed to make financial decisions.
Mm-hmm. Yeah, and we realize that if it's couples, if it's partners, if it's mom and dad, whatever the case may be, at least it's nice to have somebody to come to the table with, to have discussions about money, because many people manage their finances a different way. Mm-hmm. But it's nice to have somebody to hold you accountable. It's nice to have somebody to have the conversation with, because these days talking about money is just taboo. We don't sit around the dinner table talking about money anymore, and that our children, the generations that come after us, continue this vicious cycle of financial illiteracy. Mm-hmm. So why not start empowering each other, start having those conversations around the dinner table and have conversations about money. That's why we decided to come live, because we just wanted to start having conversations about money, because we're just so sick of people being uncomfortable with having that conversation.
Yeah, and believe it or not, Carmen and I, we don't agree with all of the financial decisions that we make, but we come to an agreement. I'm more conservative, and yes. Carmen is not.
No. Exactly. But I'm glad that you said that, because we're also not preaching that this process is sunshine and rainbows.
No.
And initially, it's going to be a little bit difficult for you to sit down and crunch the numbers and figure out, what best you should allocate your funds, how to process everything, between the 50% of your fixed expenses, the 30% of flexible, and the 20% to saving, mm-hmm. putting that money away for yourself, can be difficult. But it's discipline, ladies and gentlemen. That the more discipline that you have, the better this thing is going to get. It's like going to the gym. You go to the gym because you're trying to get your arms right, you're trying to get your legs right, and the more reps and push-ups and squats and sit-ups and whatever it is that you do, you start looking in the mirror going, oh, okay. So that's what we're trying to do with your funds, is create that discipline, create those habits, so that your bank account can start looking as sexy as your booty in the gym, basically, right? Just putting it into perspective.
Yeah, and when it comes to managing your funds, the hardest part was yesterday. As long as you are consistent, it gets easier and easier and easier. You just have to be consistent, and like Carmen said, discipline.
Mm-hmm. I say that again. The hardest part is what did you say?
The hardest part of this process is yesterday.
Mm. That's powerful.
Yeah, because we've come a long way, ladies and gentlemen. We've come a long way with our abilities to articulate what we mean when we talk about different things, financial decisions that we should be making.
Mm-hmm. Hardest part was yesterday. And then that applies to everything. So again, going back to ownership, owning your own lifestyle, all of the things that we talk about, what are you doing to take ownership today?
Right. Now, everybody's financial situation is different. That's why it's so important that you take ownership of it from the very beginning. Because if you have a foundation of ownership, then as you move forward through this process of managing your money and getting into infinite banking, if you decide to work with us, it's all about being able to manage those funds and coming to a table to discuss what needs to be done to help you financially.
Mm-hmm. One thing I want to point out, if we have a plan in place and we're executing on the plan, the other thing to note is when you are focused, it helps you avoid the shiny object syndrome, mm-hmm. which is so easy to fall into these days, because you can scroll on Instagram, on Facebook, on LinkedIn, you can be on YouTube, it doesn't matter where you are, and all of a sudden there's something you have to buy. Mm-hmm. But all you have to do is come back to the plan, come back to the source, and realize that, this really doesn't fit within the goals that I'm trying to accomplish. This doesn't even fit within my budget. Mm-hmm. So I know having focus and discipline has saved us a time or two when it comes to making uninformed financial decisions, or just being plain irresponsible. So, those are all of these things that we're talking about, because you have your whole lifetime to live, right? And when you think about it, this year, let's say this year you got paid $100,000 from your job. What do you have to show for it? Then next year you got paid $100,000 from your job. What do you have to show for it? Let's go one more year. And we're talking about $300,000 before taxes that has come into your hands. Where is it?
Now, let's even say after tax. Let's say after tax, you earn $300,000. What does your bank account look like after 3 years? A lot of times it doesn't reflect the amount of money that we made. In 3 years, in this example, you've made $300,000. What do you have to show for it?
I know we didn't have anything to show for
Yeah,
it.
we definitely didn't have anything.
So this is not a judgment zone. When we finally looked up and had this epiphany and said, holy smokes, what's the problem?
Yeah. Now, after taking our finances seriously, our income hasn't changed. Actually, when starting business, our income actually went down. But we had more money in savings. Why do you think that is? It's because we started becoming more intentional. We started taking the time and we started recognizing where money was going, what money was working for us.
Yes.
Now, we talked about the 50-30-20 rule as an example of what we do. But when you start thinking about infinite banking and the concepts of owning your own lifestyle and maybe directing funds, some of the 50% are necessities we actually own. So instead of us paying that away from us, because of the fact that we are doing banking and taking ownership of our lifestyle, we're starting to own some of those necessities. So for example, if you own your house, yes, that's 50%, or let's say you own your house with your life insurance policy. Not saying we're going to go out and do that tomorrow. I'm just saying, let's just think about that. If you own your house and you're making those payments back to yourself, you're paying yourself what is the necessity that's not even taking in consideration your savings. Now you continue to own a bigger piece of your lifestyle.
Yes.
The segue into that is the fact that infinite banking isn't necessarily about how much money you make, it's about how much money you keep. When money comes into your system, how much of your money is going out? It's all about keeping your own money in your own sphere, in your own system, or in your own economy.
Yeah, it's thank you for pointing that out, because that's really what when we transition into banking, once we have the personal finances established, we transition into banking. It's all about like Pac-Man. You know, how many more things can we continue to eat and to absorb to bring back to our household so that we're keeping more of our money?
Yeah, you start looking at your budget like, hey, okay, mortgage is $2,000 or rent's $2,000. That's how we got to the point where we were like, okay, we can pay our rent for the year and we can redirect those funds back to ourselves. Now we're paying a larger percentage back to ourselves.
Yeah, and really it boiled down to Darius had this amazing epiphany where he said, how can he and I, be the largest item on our budget? Meaning the largest expense. How can we become the largest expense on our budget? And we looked at the largest expense, and that just happened to be our living expenses, our rent in that case. So we said, okay, what is the way through what we know with infinite banking where we can own that piece of it and we're paying those funds back to ourselves? So it's really just perspective for you all who are watching. Again, thank you for your time. It's just understanding where your money is going and how you can control it. For us, we started with the biggest expense. For you, you may start with the smallest expense. But the point is,
we actually started with our credit cards.
Is you're moving, the needle. And that's all you need to do when it comes to the world of banking and understanding this financial game, because it's all about what you can control. And the more that you take on, the more that you can control. It's just an awesome thing to do.
Now, the only way we got to that point is because we were managing our finances. That's the start. That's the whole point of this conversation. The whole point of the statement is the fact that we manage our finances prior to getting involved with infinite banking.
Yes. Yeah. And we can't stress that enough. And if anything, I'm sorry if we've said it 50,000 times on this video, but it's really the truth. As agents, as financial coaches, at this point in our lives, we're not here to steer you in the wrong direction. We're not here to influence you, right? We want you to succeed. And we genuinely feel that the only way that you are going to succeed with banking is if you come correct with your personal finances, because it doesn't matter how amazing your intentions are. And we say it all the time, if you bring baggage to this party, it's going to start taking over and leaching into the system. And we don't ever want that to happen. So you can totally say, yes, I'm ready to go. And with the greatest intentions, we could know for a fact that you're not ready to go, because you won't be able to maintain your policy. So what have you just done? You've spent a ton of money on a premium for maybe the first 2 or 3 years, all for naught, because you weren't able to maintain it, nor did you pay yourself back. And that's not what banking is. So we say it's an amazing thing for everyone, but it's not for everyone.
Now, just to recap, what we want you to take away from this is, when it comes to managing your money like the wealthy or the rich, make sure you have your money isolated into buckets. A percentage of your funds goes to savings. A percentage of your funds goes to your fixed expenses. A percentage of your funds goes to your flexible expenses, your credit cards, things of that nature. Maybe even if you want, based on your situation, if you want to allocate funds to other things, make sure you do that. But just have that predetermined before you get paid, because you want to tell your money exactly what it needs to do, because you're going to be directing those soldiers to go out and make more money for you.
Soldiers meaning your money.
Your money.
So, all right. So we're going to transition really quickly to answering some questions in the chat. While we're doing so, if you haven't liked this video, go ahead and give us a thumbs up so that we can get the interaction for the day. So if anything, hello, Neely. How's it going? Thank you so much for loving our channel, Mr. and Mrs. Turnt. Let's see, talking about, what was the first question that I saw? The Safe Money Guy, what's going on from Colorado?
The Safe Money Guy, how you doing?
Love it. Appreciate the information so much. Sajisman said he didn't get the notification. I'm so sorry, Sajisman. Hit the notifications bell so that you're notified when we post videos.
Hey, David, how you doing? How you doing?
Westside Transportation is saying, can you explain how you pay yourself first? Do you put it all in the infinite banking account and then take it out for expenses, or just fund the banking account as much as possible with the cash flow?
No, pay yourself. Oh, go ahead, babe. I'm sorry.
Oh, no, you're good. How do you pay yourself first? So first and foremost, pay yourself first into a bank account.
Yes.
Get the habit of doing that. So when we say pay yourself first, we mean literally pay yourself first. You need to send those monies to yourself first, then pay everything, whatever's left over.
Yeah. So if we actually do it how we say it, is 20% of our income as soon as we get paid goes to our savings account. And then 50% is what goes to our fixed expenses.
Yep.
And then 30% goes towards our flexible expenses.
Exactly. So that's how it works. So
as soon as we get paid, money is allocated to our savings account.
Yes.
Every time we get paid on the first of the month, the first thing we do is we pay ourselves first. At June 1st, the first of every single month, we pay ourselves first, putting the money into our savings account.
Yes. So once you're focused on that, and you get in the rhythm and you get in the habit, and you know that X amount of dollars is something that you can realistically contribute on a monthly basis, then at that point, that's what we consider the amount of money that you would use to start a policy. So if you're paying yourself on a monthly basis, then you're going to start maybe with a monthly premium. If you have enough cash stacked up in the savings account where you can do an annual premium, then do an annual premium. But the point for us is to get you in the habit of saving and using the savings to create the policy, which is the infinite banking account.
Now, here's something that comes up for us on a monthly basis pretty often, is we make more money than our budget. So yeah, every time we make additional funds over our budget, that money goes straight into savings. It goes straight to savings.
Yeah, we don't even see it.
Yep. Anything that we want, we talk it over amongst ourselves between the two of us, and then we add it to our budget so that we have time to sleep on it, and we have time to make sure we make a logical decision. We don't want to make any emotional decisions whatsoever as it relates to money. it has to be logical.
It does have to be logical. So West Side Transportation, I hope that helps. And I see you gave us a thumbs up. So glad that helped. So for those of you who are not used to savings, use the tactic that we just said. For those of you who are used to saving, you're already maybe a leg up, so you could use those funds that you already have in savings to start funding your policy. And then you're going to use your policy to start taking over any expenses. Let it be debt or any transaction that you have within your banking system. Start taking over more and more of your expenses so that you can own them. So let's see, what type of plan should we be looking for? Could you please elaborate a little bit on that question? I'm not sure what kind of plan you're referring to. What's going on, Ruth Stewart? How are you today, ma'am? I know that you use your policy to pay for expenses like vacations. Do you no longer use credit cards since you use your policy to fund your lifestyle?
Yeah, we still use our credit cards, but again, we just pay our credit cards off every single month.
Yeah, exactly. And so for us, we still, every now and then we talk about the points, the point system that credit cards give you. So because we're avid travelers, for us, the points really help. So that's why we still utilize a credit card when it comes to some of these expenses. So basically,
in the currency exchange.
And yes, and because when you're traveling abroad, things like that. So what happens is you use your credit card, but then you use your policy to pay the credit card off. That's basically how it works. But Ruth, it's really going to depend on you. Some people nix the credit cards completely because they know they're not disciplined to not use them.
Yeah.
So when we're talking about credit cards, we need to make sure that we're on the same page. We are only using credit cards because we know we're going to pay them off. We're not using credit cards for consumer debt whatsoever.
No, and we're not carrying over debt into the next month because we do not want to pay any additional interest.
No, not at all. So thank you for that question, Ruth, because that is a really, really good question. Let's see, West Side Transportation, Frugal Guy here. You guys are awesome. Thank you. I say the exact same way. Perfect. So Jasmine, click the bell. Thank you so much. All right. When you guys are paying yourself first and savings, are you keeping the money in a separate bank account? Yeah. Or to make sure that the savings is always in a separate bank account. It's not in our checkings. Yeah. But if you're talking about like a different bank across the street, no, not necessarily.
Yeah. Now, some people, it is good to do that if you feel like it'd be tempting to go into your savings for anything other than what it's for. It may be a good idea for you to do that. It really depends on your personal preference and your personal situation. If you feel the need to create a separate savings account in a totally different bank to make it harder for you to get those funds.
Yeah. So the next question for Mr. Alvin Jackson, have you heard of a 1099-C to cancel debt?
Heard of it, but we prefer to use our life insurance policies.
Yeah, at the end of the day, for us, it's just about control. It's about not having fees, not having the compound interest, and having access to the cash. So we prefer using our policies if that's the case. How do you go about getting a policy? Very good question. So the first thing is you want to make sure that you're working with a licensed agent. So Darius and I are both licensed agents. If you want to work with us, feel free. We will put our link in the description for you to watch our masterclass so that you can determine if infinite banking is something you want to commit to. And then at that point, you'll be able to apply to become our client. So the first things first is you need to work with an agent that is practicing infinite banking themselves so that they can actually walk you through how to bank once you have your policy in hand.
Yeah. And honestly, if you have a really good budget, you'll already know what you need to do based on your numbers.
Exactly.
That's why it's so important again.
When you use a policy to pay your credit cards, you take the loan from the policy. Yes, never withdraw. Never withdraw because we are not trying to have our funds be taxed. You're getting a loan because it's not taxed. So always a loan. If you withdraw, you lose on the compounding. Yes, sir, because yes, ma'am, sir. I'm not sure who West Side Transportation is. When you take the funds out, you stop the compounding because you've actually taken the funds out of the policy.
Right.
And how long does the process take? which process are we talking about?
We're talking about getting a life insurance policy. It depends on the individual. Once you actually fill out your application or do your application, then it goes into underwriting. Underwriting takes maybe a week or two, but then they decide whether or not you need some type of health exam. That could take another week, and then signatures and payments. So all in all, it could take maybe about three weeks. But it really depends on how soon you schedule your appointment and how soon you sign the papers.
Very true. So Mr. John said this is the first time coming across your guys' page. I hope you're enjoying it, John. Go ahead and subscribe so that you can get more information. Alvin, you use the 1099 to cancel monthly bills. We're talking about infinite banking. We use the infinite banking, the policy, to take over our bills. From Memphis, Tennessee, let's see, are there policies? Are the policies basic health condition?
It depends on, so I'm going to answer the question based on how I think I heard it.
How we think this is.
Yeah, if you have pre-existing health conditions, it may, and you may not be able to get health insurance. So if you have some type of terminal illness or a past history of a terminal illness, then you may not be able to get life insurance. If you have pre-existing conditions, for example, high blood pressure, you'll be okay. But if you had like open heart surgery or something like that, you may not be able to get all the bells and whistles, for example.
So long story short, if you have a pre-existing condition where you might not be insurable, there are options around maybe insuring other family members, spouses, children, whatnot, so that you can still have a policy. So if that answers your question, I hope so. So Brit, love the name. So I think what you're talking about is a lending club. You're talking about, is it a good way to build wealth and save money with the family? Yes, absolutely. If you can come together and save money with your family, do it. You should absolutely do it, because cultures are doing it all the time, and for whatever reason, we always end up behind the 8 ball. So
yeah, I had a friend from Ethiopia that introduced me to a lending club that he does amongst his family members, and it was
dope, right?
Very, very interesting.
Very intricate. So if you can, absolutely. But again, the whole thing is about making sure that everybody's paying up. That's the only thing, that's the only way that these lending clubs are going to work. But if you can do it with your family, do it, and twice on Sunday.
AJ, once you pay off all the bills, how do we still maximize IBC? So the idea of IBC isn't just to pay off bills. It is actually to take advantage of investments. So if you have the money, then you have the ability to invest and have those, have the policy itself help mitigate some of the risk of the investments. So what I mean is, like, for example, if you have an investment that's 10%, now you have the fact that you're earning 10% plus the compounding inside your policy.
Yeah, so to break down what Darius is saying, so remember, we have 2 pieces of this pie. The first piece is the policy, which is going to earn a guaranteed rate of return regardless of what you do. The second piece of this is the banking piece of this. So when you get a loan from your policy, what are you doing with it? So when we're talking about another rate of return, Darius mentioned 10%. If you have your money outside of the policy and you're pulling a 10% return, not only are you getting 10% from whatever's outside of the policy, but you're getting the guaranteed return from the policy itself. So you add those 2 together. That's how you maximize the policy. Because anytime that you have money outside of the policy, you better be making money, because it's costing you to keep money outside of the policy. When I say that, I mean, when you get a loan from the insurance company, they're going to charge you 5% simple interest. So you need to make sure that you're making more than the 5% simple interest, 10, 15, 20, it's easy to do so, to make sure that that the cost can be associated for it. You're not paying for any of that out of pocket, and also just to make sure you're keeping your money moving. So how you maximize infinite banking is, what are you doing with your policy loans to create cash flow?
Now, the interesting thing that I thought of when Carmen was explaining this is the fact that when you think of a bank, whenever you borrow money from a bank, they get a loan from someplace else, and that's from you. The difference is, when you're doing infinite banking, you're using your banking policy in the place of the bank. So when you get a loan from the insurance policy, which takes the place of a bank, you're getting a loan from the insurance company.
Yeah, very good point. And West Side Transportation is a sir. It's Jeff. What's up, Jeff from Glendale, Arizona? We love AZ. Phoenix is our hometown. Shout out to the Phoenix Suns. Don't hate. Okay. So let's see. The next one, Ruth. Love it. On a roll, Ruth. I know you use another checking account as your segregated account, but can it be a savings account? Great question. Do you want to take that?
So do not use your savings account as your segregated account. And the reason why is because you only get 6 transactions per month. The point of a segregated account is to continuously be using the funds. So the reason why I put it in a separate account in the first place is because when we put it into the insurance company, we have to go and ask for a loan again. And if we're going to be using that money within that same year, we shouldn't. I don't like having to go to the insurance company to get money that I just put in out. So we use our separate checking account for that.
Yeah.
So really consider using a checking account for your segregated account and not a savings account.
Yes, and that's just, again, our personal preference. We actually started, Ruth, with a savings account, and then after that 6 transaction, we realized we couldn't do, we couldn't swipe anymore, and we're like, oh, no, we need to move this over here. So it's just up to you. Maybe you won't be doing those many transactions, but we would hope so as a banker as you move in the money. But we like what you're thinking about, ma'am, because also we realize that savings account, maybe not so much anymore, are interest bearing as opposed to checkings accounts.
Mm-hmm. Next question is, Mr. Hayward, what is the average cost for a policy per year? Well, it depends on how you manage your funds.
Yes.
Our policies are $10,000 annually. We have people that do policies that's $150,000 annually. So it depends on your budget and how you're managing it.
Mm-hmm. Yeah, and really, honestly, guys, the more we're working with clients and the more we're applying this knowledge, you really need to come to the table with a good amount of cash. So we say at the minimum, you need to start with at least $6,000 a year, because it's all about trying to maximize your funds, right? You need to be able to take over your expenses, and you're not going to be able to take over your expenses if you're putting $100 a month into this thing.
Yeah.
So you really need to be able to have, a few $1,000s at your belt so that you can start traction immediately.
Right.
So let's see. So is there no need to wait to pay off debt to get a policy? Can we go ahead and set up a policy?
Yeah, you can, but just make sure you have the cash flow there. That's the most important thing, and the habits already built up prior to getting a policy.
Mm-hmm. Yeah. So basically, the point is, and I really like that question, because I see where you're thinking. Because with Darius and I, when we started, we said, hey, we're not going to aggressively pay off this debt anymore. Throwing every dollar that we had at this debt. Let's get this policy, and let's the money that we were throwing at the debt, and let's use those funds to then hammer at the debt again. Mm-hmm. So it's really, this all ends up being personal preference, because the beauty about it, it is your banking system, so you can do whatever you want.
Make decisions based on your budget.
The numbers have to make sense. So do the calculations, see if it makes sense to be a little bit more conservative or less conservative when it comes to your debt payments.
Yeah.
Before or after getting a policy. So what's a good company to get an agent?
There's agents with all companies.
Yeah, exactly. So just make sure that you're working with a mutual dividend-paying whole life insurance company. Great content, guys. We've learned a lot from you. Thank you so much, Mr. Martin. Can't wait for our season in a few weeks.
How would you recommend managing leftover cash flow after maximizing a policy? You have to make sure that you have investments. That's the point. When you have,
Thunder.
Okay. So when you have leftover cash flow, that means you're doing an amazing job. But let's think about it.
That's exciting.
That's a good place to be in. But you have to figure out other ways to direct those funds, because the additional cash flow that you have, you're also paying taxes on it. So you have to figure out an investment to put that money in so it can continuously make more money.
And there's a few different ways to apply this, because assuming that we don't know what you're talking about, let's say you've maxed out your policy, meaning you've just paid your premium, which is cool. Now the next thing is, have you contribute to the additional paid up additions, which is the MEC limit, you know, that window of opportunity that you have to dump in more funds. So we would say that's the first place we would look at to see, okay, you know, if we have some extra money, can we put it into our policy without it becoming taxable? And then if not, now we're having a conversation of, do we need to create another policy?
Mm-hmm.
And if we can afford this other policy with this extra cash flow that we have, is this something that we can maintain on an annual basis? Because just because we come into $50,000 today doesn't mean that this $50,000 may be a recurring expense or piece of cash flow that's coming from us. So I would say we start with that. And then the next thing is just making sure that we're continuing to cash flow, put money in investments where we can make more money.
Now I want to, Nellie D put like 3-4 comments in here saying, was wondering if there was time to schedule sooner. We actually booked out until that day. So the soonest available appointment we have is
what was available.
What is available.
Exactly. So let's see. Denzel, what's up, brother? Thank you so much for hitting us up.
Denzel Rodriguez.
Appreciate that. Let's see. Westside Transportation. If I max fund a policy, then take out a loan, say up to 10% of the loan, with the extra percentage paying, will that MEC?
So it honestly depends on the policy and the year.
Mm-hmm.
Because what I realized with some of the policies that we've done, my MEC limit continue to go up as my policy got more seasoned or older.
Mm-hmm.
So it depends on the policy, depends it on the year.
Yes.
Of that policy. But for me personally, I don't add any additional funds into my policy after the 4 to 5 year mark.
Yeah, so I think when we're talking about max funding, then I take out a loan, say up to 10%. I think we're talking about two different things, because you're talking about max funding and then you're talking about the loans. So when you max fund a policy, we're talking about the deposits, the money that's coming into the policy to grow the policy, mm-hmm. whereas the loans are just replenishing what you've taken out. Mm-hmm. So if you've max fund the policy, that's not taking, your loans aren't taking into consideration of that. It's just saying, if the insurance company says you can put $50,000 a year into this thing and you put $50,000 a year, you're done.
Yeah. And you know what? So this is how we max fund our policies. Let's say I have a policy and I can put in an additional $4,000. I'm not going to put the additional $4,000 into the policy out of my deposits or out of my savings or my income. I'm going to find a way to use those funds, and the interest that I earn is going to be the additional funds that I put into the policy, the interest that I earn, because I'm really not trying to pay these policies other than the deposits. What I want is I want to outsource that so that my investments or the money that I'm putting the what I'm borrowing the loans for is replenishing the policy plus the additional funds. Yes,
very good point. The point is initially, right, we might have to fund this ourselves, but long term we want someone else to be funding these policies for us, mm-hmm. through investments or the cash flow that we're creating.
John, you saw our channel the other day with Velocity Banking and Infinite Banking. Which comes first? Velocity Banking comes first depending on your finances. If you don't have any funds, start with Velocity Banking so that you can start building up those habits and understanding of credit and how that stuff works. And then once you have a better financial situation, make sure you then go into Infinite Banking.
Yeah, because the point is you need cash flow for banking to start, or you need to understand how to be creative enough to start a policy. So sometimes we say it might make sense for you to start with Velocity Banking to pay down some of those debts so that you can release some cash flow so that you can start a policy. Because eventually once you start a policy, you're actually going to do Velocity Banking with your policy instead of using line of credit, if that makes sense. But we just need to free up some cash so that you can afford the policy in the first place, because you can't buy a policy with credit. The insurance company wants cash.
Yes.
Let's see, what companies offer policies? Look up mutual dividend-paying whole life insurance companies. Anyone will work. It's just, again, making sure that you're partnered with an agent that knows how to design the policy for cash. Hello from London. What's going on? Thank you for shouting out to us. Thank you for hanging out. Again, if you were with us, hit that like button. Thank you guys so much. You guys are asking amazing questions. We're going to wrap things up here because it is about to pour and we want to make sure that our internet is still stable. Okay, let's see. Denzel, thank you so much for saying. You say, and sometimes you might have to go ground level, exactly, and do the debt snowball with velocity banking.
Before velocity banking.
Before velocity banking, depending on your personal finances, exactly. Because you may not be able to do velocity banking when you're applying for lines of credit and all sorts of stuff because you may not qualify. So that's that. Thank you, Denzel, for that.
The last question I'm going to do, how do I know the agent is a tight one? What you do is you ask him if he has
a tight one. I love that.
You actually ask the agent if he or she has a policy, or his or herself, and what they're doing with their policy.
Mm-hmm. Nellie, I like what you said. You're going to get your numbers in order before the July call. Yes. And if anything comes up sooner, everyone will be notified, so you guys can try to schedule a little bit sooner. So that way your call can be as productive as possible. So we are going to sign off, guys. Thank you so much for your time, for your questions. We are going to be coming live again next Wednesday. We think Wednesdays are good to talk about wealth.
Wednesday afternoon.
Wealthy Wednesdays. So again, if you are interested in honing in your personal finances, then click on the link in the description or click on the link in the chat so that you can buy our personal finance course so that you can get your mind right, you can get your numbers right, and you can understand how the money game is played before you get into velocity banking or infinite banking.
Yes, wealth is a mindset.
Exactly. Thank you guys so much for your time. And also, if you are interested, check out this next video where we are talking about how infinite banking works. And don't forget to hit that like button, subscribe, and we will see you on the next video.
Remember to own your own lifestyle.
Or someone else will.